with. I was an independent contractor and was laid off. The problem is my income was given to me without taxes taken out, and a lot of folks do that. I not only owe income tax, but self-employment tax too. How is that possible when I can't even get a job?
Sure, this is an interesting question and a really common problem. There's a lot of independent contractors out there. Those are people who aren't on salaried wages where money's being withheld from their paychecks and sent to the IRS on their behalf. So they're not getting refunds at the end of the year unless they're making substantial estimated tax payments on a quarterly basis. For this taxpayer, this question brings up a twofold answer. First of all, if this person's an independent contractor and has not filed returns, this person needs to go out and file returns. And the way they go out and file returns is they need to order two documents from the IRS. The first document is called the record of account, and the second document is called the income transcript. The record of account will tell this taxpayer exactly what years are not filed and what credits he has for each year, as well as any actions the IRS has taken for him on any unfiled years. Oftentimes when independent contractors, as employees, if they don't file returns for a period of years, the IRS will go and do that for them. So we need to see if that's already happened. The second document is the income transcript, and the income transcript is a record of all the 1099s that were sent by this person's employers to the IRS. The IRS keeps a file on that, and that file lasts for years and years and years. So somebody who hasn't filed tax returns for 6, 7, 8, 9 years can get their record of account and income transcript and all the information, most of the information they need to know to file the missing returns. The second issue, so this taxpayer absolutely needs to go and make sure if their returns are not filed, get them filed and use the record of accounts and income transcripts to do that. The second part that this question implies is that if the returns are filed and this taxpayer owes tax, what can they do to resolve the problem? Well, in this situation, since they're unemployed, there's three options available. The most likely option is going to be something called hardship status. The IRS has a designation for taxpayers who owe taxes but can't afford to pay them back of hardship status. This means that the taxpayer's account with the IRS, delinquent account, the taxes due, are going to be removed from active collections and put in basically on the back burner. The IRS is going to take no collection action against this taxpayer while he's unemployed and unable to pay his taxes back. This hardship status can last anywhere from 2 years to even more. There are triggering mechanisms that will end the hardship status. One triggering mechanism is that this taxpayer's income could exceed a certain level, $45,000 or $50,000. Once he files a return showing that he's making $45,000 or $50,000, his case can be brought back into collections. Then he has to address his delinquent taxes. The second option for this taxpayer would be to go on an installment arrangement. Given the fact that he has no income, or let's say very little income, it's possible to go on, let's say, a $50 or $100 installment arrangement with the IRS. The advantage of an installment arrangement with the IRS is that they don't expire. If this taxpayer stays on this installment arrangement of, let's say, $50 or $100 for 10 years, the tax will just go away on its own, even if it's not paid. Tax liens expire. And then the third option is an offer in compromise. If the taxpayer can show that his living expenses are reasonable and that he has sufficient income to cover his living expenses, not in this case, but if he had sufficient income to cover his living expenses with no monthly excess income, then the IRS would take a much smaller negotiated settlement against the taxes that are due. So those are the three major issues I see with respect to this question, given that the taxpayer has already filed his returns and already has the tax assessed.
Now Sam, this almost seems like a question someone in my family could ask. She was working a regular job part-time, not making a lot of money, getting some outside income as an independent contractor. And what happened in her case, she got assessed the taxes, panicked, went out and put it on a credit card. Sounds to me like she'd have been better off, in retrospect, to work out a payment agreement.
Well, paying off the IRS by borrowing on a credit card may not be a bad idea because the IRS does assess penalties and does assess interest. However, the interest that the IRS assesses is based on something called the applicable federal rate, which right now is very, very low. You know, it's a few percent, 4%, I think, as we speak today. It changes on a regular basis. However, credit card interest, I guess is common knowledge, is usually extremely high, so that may not have been a good economic move. But then again, you know, the credit cards could be discharged in bankruptcy as little as a year from now, whereas the IRS tax liability may not be dischargeable for 2 or 3 years. So if she's going to be doing a bankruptcy down the road without intentionally trying to steal from the credit card companies, that credit card debt might be dischargeable in bankruptcy. Also, what's interesting too, with the question that you ask, there's a second facet to this question. if this person was an employee but treated as an independent contractor, this person should be filing a tax return as though wages were withheld from their wages were withheld from their paycheck. The employer is the one who has to deal with the issue of whether this was an employee or an independent contractor. But if this person was really an employee and not an independent contractor, they should be filing returns as an employee, not as an independent contractor. And that tax obligation, that tax responsibility belongs with the employer. And I see a lot of cases in my firm where employers are treating their employees as 1099 independent contractors to try and reduce their tax burden, but that's illegal. They shouldn't be doing that, and it causes a lot of problems. And we represent a lot of employees who've been hit this way. We've also represented a lot of employers who've done these bad acts. We've worked both sides of the fences. As tax attorneys, we do what we're paid to do, so to speak.